total return for my stock portfolio is 15.6%, and I've been investing for 3 years. This doesn't seem like a very good return, but is it as clear as that? Is it just I'm just bad at investing? I want to show you today each of my individual stocks, how they've actually returned over the last few years. And I'm also going to tell you about why I think my portfolio is going to perform really well over the next 12 to 24 months. Let's get into the video. So this is my spreadsheet where I track all of my stock portfolio all in one place. I have two apps which I use, which are Freetrade and Trading 212, and this spreadsheet brings it all together. So as you can see in the top right, my portfolio is sitting at £18,500, and my total return is 15.6%. That total return comes to £2,355, which is made up of £456 of dividends and £1,900 of gains in the stock market. My portfolio is made up of 21% ETFs, 36% UK stocks, and 43% US stocks. Now let's just take a look at every single position in the portfolio. I'm going to show you individual statistics on how they've been performing since I've owned them. So if we come over to the info tab, I have a list of stocks. Some are in grey, which I've actually sold out of those positions. And these ones up here, these are all the positions that I own. So I own VWRL, which is the Vanguard All World ETF. I own Realty Income, which is a real estate company based in the US. I own Unilever, Visa, Microsoft, GSK, Pepsi, Rolls-Royce, SSE, Alphabet, Lloyds, Tesco, a Franklin FTSE India ETF, and Amazon. Now, not all of these I've held for the same amount of time. Some of them I've held for nearly 3 years, and some of them I've only held for a few months. But we can see here the amount that I've invested into the position and the amount that the position is currently sat at. So my biggest position is VWRL, and they go down in position sizing like this. And you can see here the gain or loss that I've made in percent and the gain or loss I've made in pounds. So you can see VWRL sitting at £2,900. The gain is 3%, and I've made £83. But then if we take a look at Pepsi, for example, I'm sitting at £1,100. I've lost 2% on the position, and that is minus £24. Just a quick note on what we should be expecting over 1, 2, or 3 years for total return for each of the positions. If you're expecting an 8 to 10%, we'll take 8%. So 8% is the return. And then the next year, if we're expecting 8% again, that 8% won't be 8% from the total return. It'll actually be 8% plus 8% on that 8%. It'll be the 8% times 1.08. So we should expect a return of 8.64% in the second year, and so on. So in the third year, we should expect the 8.64 times the 8%. So that would be 9.33%. And this will continue. So I've only been investing for 3 years, so I'll be capped at the 8% plus the 8.64% plus the 9.33%, which will give me 25.97%. But if I'd been investing for, say, 5 years, I should expect a return of about 46.9%. And then if we go down all the way to 10 years, I should expect a return of around 115%. That's what we should be expecting. Over 2 years, 16.6%. Over 3 years, nearly 26%. And over 10 years, 116%. Now, obviously, this is fixed, so we're looking at 8% return a year. That isn't going to happen on an ordinary 3, 5, 10-year basis. But over that time, we should expect, on average, around 8 to 10%. The first positions I'm going to take a look at are the UK stocks, because the UK stocks I've actually held in my portfolio for the longest time. I could just filter over here for UK, and that will give me all of my UK positions. We're going to discount Rolls-Royce, simply because that is actually a new position for me in the last few months. As you can see, it's at 2.22%. So if we just take out Rolls-Royce, we're going to take a look at these 5 positions and talk about how they've performed. Unilever I've held in my stock portfolio for a very long time. I'll tell you when I first bought into this position. So we can come over to my free trade import, and I can then filter it for Unilever. And if we go right to the top, you can see I first bought this position on the 30th of May 2022, and I've recently added to the position in January 2024. We've held that position in the portfolio for 2 years. My gain or loss in the position is 29.46%. Even if I had held this position in my portfolio for 3 years, we've made a gain in comparison to what we should be expecting to return. I've only held the position for just over 2 years, so it's actually performing very well. In fact, after 2 years, I should have expected 17%, but I've actually returned 29.5%. I think Unilever fits the bill for a good return. So the next company is GSK. Now GSK was one of the companies that I just dumped a load of money into. My first transaction on the 1st of September, I put in £392. A few weeks later, I put in another £260. About 6 weeks after that, I put in another £289. So within about 2 months, I'd actually put in £944 into the position, and I only overall invested £1,031. So I actually invested quite a bit of the money in one go. GSK, I've returned 20%. I've held that position since September 2022. So I've just about hit 2 years, and 2-year mark is the 17%. So I think that is a good return. Just going to skip through the rest of these simply because they are roughly the same in terms of when I bought into these positions. So SSE, I've returned 13.89%. I've held that since around the same time, May 2022, when I bought Unilever. I've added a bit more to those positions, but if we take a look at the first position, it's 2 years. So 30.89% is below that 17%. So SSE is actually underperforming. Lloyd's 23.4%. It is outperforming what we should be expecting. And Tesco, 46%, is vastly outperforming what we should be expecting at this point in my investing. Now, all of these are just market gains. I haven't actually included the dividends that I've received as well. So if we include dividends for Unilever, that 29.5% turns into 34.3%. GSK, 20% turns into 27%. SSE, 13.89% turns into 16.7%. Doesn't go over the 17% mark, but it comes close to it with dividends. Lloyd's, 23% turns into 30%, far outstripping 3 years, even though I've only held it for 2. And Tesco, 46% turns into 52.5%. And that is very good return. Those are my UK stocks. Now let's go take a look at the US stocks. So these are my US positions. I have Realty Income, Visa, Microsoft, Pepsi, Google, Amazon, and then the ones in grey, which I'm not going to talk about. So I'm going to filter out the ones in grey. And then I'm actually going to filter out Visa, because Visa is a very new position in the portfolio, and I don't think it's acceptable to really talk about the returns. I've returned 3%, but it's not really relevant. I've only held it for about 2 to 3 months. So I'm going to filter out Visa, and now we're going to talk about the rest of these positions. The biggest one on this list is Realty Income. Now, Realty Income, I've held in this position for a very long time. I've had a lot of dividends from them, probably my biggest dividend payer. They pay monthly dividends, and that was, Realty Income was one of the reasons that I made this YouTube channel, to make videos about dividends. But since, over the last 6 to 12 months, I've actually moved away from purely dividend investing, and I have a more diversified portfolio. But let's take a look at the returns. They're sitting at 3%, and that's not great. Even with dividends, it takes it to 7.75%. But if we have a look at when I first bought into Realty Income, it was September 2022, and my most recent order was July 2024. So I'm actually continuously buying into this position, and I overbought into the position when I was in the red. I continued adding into the position, and I do expect when interest rates begin to come down that this stock will do really, really well. So although it's underperformed so far, and I'm not particularly happy about it, I do expect it to outperform the stock market over the next 1 to 3 years at least. I'm going to hit Microsoft, Google, and Amazon at the same time. I bought them in October 2022, and this was just after I sold out of an ETF that I was buying into. I had about £1,800 in this ETF, and I took all that money out and I spread it across a few different stocks. And it was a very lucky time to invest in Microsoft, Google, and Amazon, because that was where they bottomed out in October and November 2022. So that's why their percentages are actually still quite good, even though they've had a few bad months. Microsoft up 46.8%, Google up 38.98%, and Amazon up 46.3%, both well outperforming the 2-year mark of 17%, and even outperforming the 3-year mark of 26%. And just in general, I think that these companies are amazing, so I'll probably continue buying into them. And then the final stock is Pepsi. Now, Pepsi I own as a defensive position. They pay a reliable dividend, they have dividend growth, and I don't expect their stock price to change a great deal. I do expect it to go up. I was expecting some form of return over the last few years. I first bought into Pepsi in January 2023. My most recent was January 2024. I haven't really been buying into them a whole lot this year. I do expect some form of return from this company, and I do believe that they are a strong company. They're just a bit out of favor at the moment due to pricing pressures and all that sort of stuff. But yes, down 2%. If we include dividends, I'm actually up 0.08%, so I'm pretty much flat. which over nearly 2 years of holding them, that's not good enough. They are vastly underperforming. But yeah, that's my US stocks. And we'll just do a quick view on my ETFs. I did hold an Indian ETF. I sold out of that and replaced it with the Franklin Indian ETF. That's a very new position, so we're not going to talk about that. No point. The only one realistically I should be talking about is VWRL. VWRL is an interesting topic because I'm constantly adding to that position. And I mean, like, I'm adding 2-3 shares every single month. If my position is sitting at £2,500 and I add £300, I'm adding well over 10% to that position. So it's constantly changing. At one point, my gain was around 15%, but I'm continuously adding to the position at higher and higher prices. Therefore, it's going to bring that gain down. If we have a look at my average share price per edition, it's 97.27. If we go and have a look at the position, FTSE All World, I initially added one share at £87, and I was adding at 87, 87, 88, 86, 86, 85, 90, 92, 92, 95, 94. Then it goes up, you know, February, March, 99, March again, 101. And I'm adding to the position in Trading 212 as well. So I added 3 shares at around 101, 102, 102, 101, 186, 100.86, 102, 104, 103, 102, 101, 100, 98, 103, 101, 100. So I'm adding to this position over my average share price all the time, which is unfortunate, but that's what ETF investing is. You're just adding to the position, building up a position. Over time, you'll make gains. So if we take that first buy at 87, I've made a gain of 15%, made a gain of about 15%. So you can see that my original share buys, I've made quite a good bit of gain. But obviously, if I'm continuously adding at around 100 and it's sitting at 100, is what it is. But yeah, I've made a gain. I've made a return of 3%. But you can see it's 17% of the portfolio. I'm going to make it a big position of the portfolio, 25% probably around there, maybe, and then just continuously add to it. Because it's easy to do, you don't have to think about it. My total return is 15.6%. When you have a look at the individual stocks, some have outperformed, some have underperformed. I just wanted to make this video on the returns of the stock market. 15.6% doesn't sound great, but some of my positions are doing really well. Some of them are doing not so well. I will do a review on the newer positions that I've got, like Rolls-Royce, Visa, the Franklin India ETF. But I'm not going to do them yet. I don't see the point in reviewing the performance if I believe in the stock. I believe in Visa, but I don't expect to have crazy returns unless I'm really lucky within the first 3 months. Tesco was pretty much flat for like a year. One of my ex-colleagues laughed at me for investing in Tesco. And now it's returned 46%, which you might think that's bad, but that's better than the average of the stock market. So, yeah. Thank you for watching this far into the video. If you enjoyed the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, leave a comment below and I will give you a reply. And yeah. See you later.